Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. I hope you're having a fantastic day, doing a lot better than we are here. I don't know if you caught the news, but we are traveled to Dubai. Took us 4 days to get here with all the crazy flooding. Make sure you look that up if you're not already familiar. It is a lot of chaos here. Regards to that fact, we're going to take a look here at Bitcoin, obviously kind of double check a couple of things. It's been a little misbehaving here lately because a lot of fundamental catalysts that we kind of have no control over with the war in Iran. So it's kind of one of those interesting situations. Let's take a quick look at the liquidation data first and kind of go from there. So if you're new to the channel, welcome aboard. Thank you for hitting the like button, commenting below, and of course, subscribing if you haven't already. So taking a look here at the last 7 days of liquidation, we can kind of see there is a pretty decent chunk of liquidation back up at about 68, 69,000. That's kind of par for the course. We don't need to worry about that too much right now. It's just kind of is what it is. We're far away from that. I don't think we're going to be able to see that reclaimed immediately. We do have Bitcoin halving, I think, effectively going into position today. So we do got to be mindful that we could see that be another catalyst pushing the price action up or down. Based on the Bitcoin ETF and everything that's happened recently, we can literally flip a coin right now and kind of guess where it's going to go. So what we want to look at just really quick though is the 1 month liquidation levels and kind of verify this because there was a chunk, I think at 58,000 for liquidation. There it is, yep. So just to clarify, as low as 55,000, 55.5, upwards of 57 even. Decent amount of liquidation in the data there. So that kind of lets us know that if the price is swept any lower to break this this bullish flag pattern that we have, we could very well see that be the next target. So having said that, what we want to look at next would be Bitcoin. Actually, quickly to note here is the bull flag that we're seeing here. We can see it's retested this lower level 3 times and twice in the upper. So hypothetically, we should be range bound within this until it breaks either way. At this point, we could very well see 72,000, that upper level liquidity swept if it goes the way that it should and continues higher. But again, a little premature here. Leaning a little bit more towards long term, the price going up, obviously based on the fundamental catalyst coming up here. But for right now, that's kind of where we're at. If we take a quick look at CME futures, we can see that all of our CME gaps have been fulfilled. We had a small one at 63,000, and then the previous from 64 to 66.5. That is an area that's been taken care of. So all CME gaps have been effectively filled here for the last, that's about last month's worth of CME gaps. All right, last but not least, Bitcoin dominance, just to clarify, still kind of high. It's retesting this 55% range. So if we can get back down a little bit lower, we're going to see some altcoins kind of recover. But between now and then, I would really just recommend not taking any trades with altcoins right now because they are knee-jerk reactioning down 2 to 3x of Bitcoin when Bitcoin pulls back. And with all this fundamental stuff going on the back end with the war and just overall inflation, things are not really ideal right now. So long story short, it's not a bad thing to kind of sit back and wait for a good trade. Honestly, there's not a ton of opportunity right now, and majority of my community is just kind of hanging out on the sidelines waiting for good opportunities. So we're going to see if we can find one here today. Let's jump into the daily time frame and work our way down. So with the daily, we can see here if we pull up our moving averages, we are still below the 50 and the 20. That's generally a bad sign, but it's not terrible. We got the 100-day SMA. What do you know? Hanging out right there at about 57K. So that's a benefit in most cases, but if you look at the macro here, we can see that the convergence on stochastic RSI is swinging up for the second time. That's generally a positive, but we have a really low money flow index. So money flowing out of the coin, big surprise, it cannot sustain the price. So if we do see we're under 50 on the RSI as well, and the MACD is diverging here concurrently. So when all that's put together, it's generally a bearish type of sign. But once again, we are honoring this descending trend with this bull flag, and there's a strong chance that could recover if we were to break this initial descending trend here, which we can see on the 4-hour time frame. So I'm really looking for a closure today about 61,700, preferably 63K or higher to break this descending trend and to get back up over the 50-day SMA. But 4-hour time frame, let's double check here. We are looking still fairly bearish. We got a rejection off 50 on the RSI on the 4-hour. Same thing with money flow index is kind of pulling back and stochastic swinging down. So it would make sense for the price to continue lower, but we also got to recognize that we had this really aggressive 5% correction this morning when the market opened up. It's never a great sign. It doesn't really allow us to get good confirmation on either an up or down trend. We got rejected off the 20-day SMA here as well, so generally this is less favorable. The 4-hour time frame is also looking like we could see further downside. If we take a look at the hourly and we double check our cloud, conversion line is now within the baseline or sorry, correction, the lagging span is intersecting. When we see that and the price action is kind of hovering above and below the cloud, this is never really a good consideration for taking a trade. This whole week has really been the same scenario, but while I wasn't able to update you on that, I can tell you that no trade is a good trade right now. There's no other way around it. So simply to put here, simply to state what we want to look at and to summarize with is that we're fully bearish on most time frames with potential bullish confirming factors for the price action breaking up. If that does happen, we'll pay attention to that. But to me, getting above this descending trend here, we're still establishing lower highs and lower lows until we can, kind of confirm range bound activity and or establish higher highs. We have no reason to take a long position. So I'm leaning more towards a long with Bitcoin at 60,000 if that's an opportunity. But again, I think that we got to be mindful of the back end data here telling us with this liquidation at 55.5, 57,000, there's a decent chance we could see the price pullbacks further. So really, no trade is a good trade right now, folks. I think that's probably the best way to go. So I know it's kind of boring and not really the ideal conditions for the market, but good traders are going to wait to get where you need to go. And at this point, we don't have any confirmation that there's any solid trading scenarios here. So me personally, I'm going to wait to see how the daily candlestick closes today. Preferably 60. What is it? This support level here at about 61.6. That's based on previous candlestick daily closures. If we can close above 61.6, we might have a chance to see in recovery. But until we can break above this descending trend line, there's really no reason to take a long. Okay. All right, folks. Thanks again so much for watching. Don't forget to like, comment, and follow if you haven't already. Deeply appreciate your patience with me being MIA for the last few days. But we're safe and sound here in Dubai, and send my my love and appreciation to y'all from here across the seas. Now, again, if you are in the area, of course, feel free to reach out and let me know. Be happy to see what we can do to connect. But thank you so much. Hope you all have a great rest of the day. We'll see you in the next one.